Good morning. In this presentation, we are going to see how we can trade in MCX Gold today. Before looking into that, let us see what happened yesterday and what we expected yesterday. Yesterday, gold market opened around 29,630. So you can see this black color box that indicates the price opening. And yesterday's price opening is just below the previous day's price closing. So you can see the previous day's price closing was around 29,660 and yesterday's price opening is just below the previous day's price closing. And what we expected yesterday was that even though the market closed lower on the previous day, and even though the expected price opening is also quite a bit lower, what we expected yesterday is that yesterday we had taken some risk which is against the MCX gold trend to go for buying till 29,580. So that is the zone, that is the type of expectation we had comparing with the international prices. We expected that the market will show some turnaround in 29,520. So that was our expectation. Let us see what happened after that. So after the price opening, you can see that the market was trading around taking some resistance around 29,620, and it is again a straight fall, and the market came down and tested this 29,520. So right from the price opening, it is a great test for us. So this pressure was created purely due to the Indian rupee. So that created a lot of pressure, and the market struggled to stay above 29,620. That again pushed the market down till our expected major zone of 29,520. Now let us see what happened after that. So since this zone is a good has a good potential buying zone, just because we expected some buying, and also this zone has acted as a major support in the histories of gold. So what happened is that this zone provided some support, and this pushed the market till the opening, and it reached around 29,636. So that has created some buying momentum. This zone actually had created some buying momentum that pushed the market higher, but the market couldn't sustain this 29,620. So you can see that after reaching the zone, suddenly the market came down, and a failure to sustain above 29,620 has again pushed the market down. What we need to think is that even though we expected something and the market is finding some support around the zone, but we need something around above 29,620 to push the market higher. Now let us see what happened after that. So again the market is coming down and testing 29,540. You can see that the market is creating some support, but the trend is completely coming down. So it was a clear test. The market entered into 29,520, and again you can see that the market had provided some buying around 29,520, and it pushed the market till 29,600, and again it is a failure. The market couldn't break this 29,620. You can notice that though we get a good support around 29,520, every time the market testing 29,520, it is pushing the market higher. But the major thing is that you can see the highs are decreasing. So right from the opening, the market went higher, but these highs are decreasing. That is clearly indicating us a sign of some weakness happening in the market. So that pushed the market down. So it is a very long consolidation just above 29,520. The gold market really tried a lot to push out something above the zone, but it is a complete failure. So you can see in the later session the market just came down, and clearly it is entered into this trading session. Now we can understand the market is quite weak in the zone, and it is again providing some support in the market, and it is a long consolidation that is happening around 29,520, and most of the time it is trying to stay above and put everything above this 29,520, but every time you can see that it is a drop down. You can very well notice a pattern which is forming. It is decreasing in the high. You can see the high is decreasing, and the market, even though it has providing a platform of around 29,520, and that pushed the market down. You can very well clearly note that clearly broke this major support zone of 29,520, and the market closed around 29,470. So when we see the entire price action, we can say that right from the price opening, it was completely dominated by the sellers. So you can see since the top and the trend, you can see very well it is trending down. But the positive thing is that every time the market has provided us an opportunity, because it is a long struggle around 29,520. So that is what we expected. We expected that the 29,520 can provide us some good support to push the market higher, but it is a complete failure. The market it was a long struggle, but it ended up negative. So the market came down and closed around 29,470. So what we can expect for today also. And one more important thing before our expectation for today, we want to say that it is a pure adjustment that is happening in the gold price internationally and in the MCX. If you go and see the COMEX price, it is a clearly uptrend in gold, but when we see MCX price, it is a clear downtrend in gold. The major factor behind these price actions is rupee value. Since the drop in, you can see the yesterday rupee dropped. So that is a major reason behind these scenes. So what we can do for today is a major factor, because the market is trying to find some balance between the international price and the Indian gold price. So what we can do is going to be entirely a different strategy which we need to follow in order to tackle this kind of situations. Because quite often today's scenario, we will expect most probably this type of situations will happen for us. As a trader, we should be prepared with a new strategy for also. So what we can expect is that we are expecting gold to open more or less around the same zone, and it is subject to variation based on the rupee opening. So since we are posting these videos well before the currency and commodity market price opening, so that you can also prepare and do your homework. So what we can expect is that if the price of the rupee is opening is more or less equal to the previous day's price closing, so you can expect the gold price to open more or less in the same price zone. Even though if it is going to be up or down opening, we are going to follow a different strategy. So after years of trading, we had market has taught us a valuable lesson in order to tackle these type of scenarios and situations. When there is a lot of uncertainty, uncertainty is that the price in international prices are moving higher and MCX is dropping, and there is uncertainty. What we can do is that if the market is going with our expectation, go with a trade, else don't go for a trade. That is the very serious lesson market has taught us after years of trading. So if the price is going with your expectation, enter into the market and wait for the market so that it will consolidate and it will come in line with our trend. So what we are going to do is that we are going to target this 29,520 and 29,500. So since the price in the international price are moving higher and the MCX is moving down, again we are going to target this 29,520 zone. Since we had experienced yesterday that this has provided a valuable support for the gold market. Unless until the price is going to move above 29,520, we are not going to take any call, because selling in this market is quite riskier, because something if it is happening, if the price is dropping in line with the trend, and it is okay and fine, the price is moving with the trend, but we need to take buy call above 29,520. We are not going to take buying below or any zone just below 29,520. If the price is going to break and stay above 29,520, go for buying. If it is going to trigger the stop loss of 29,480 or 460, whatever you are placing the stop loss below 29,560, just wait, don't go for a reversal, don't go for a selling. If you see any price action above 29,520, you can go for a buying. It is again we are saying that it is a purely we are going to test the market because of this uncertainty, and if it is not going in line with your expectation, let us note we can stay away from the market and wait for a good opportunity. The gold always because the market is going to be there, we are going to get our day. So we need to be patient enough to show the market, to patiently wait for our trading entries. So this is a clear strategy which sometimes it helps you a lot. So if you are uncertain about the market, just stay away and watch the market patiently. So what we are trying to do is that if you see any price action above 29,520, you can go for a buy call, and we need to book profit at regular time intervals based upon your money management techniques and the amount of fund you have in your trading account. Use the money management techniques that suits your type of trading. So anything above 29,520 you can go for a buying. Something below 29,520, place a stop loss whenever you have taken a buy order. Then place a stop loss and try to book profit and use all the money management techniques which you know, and based upon the amount of funds you have in your trading account. And if the price is staying below this, just leave it, let the market will come down and it will stay in line with your expectation. Then we can go for a trading call, because trading in gold, as we always say, since the volatility is high, we cannot, without any valuable information or very valuable confirmation, we cannot just go and trade just like that. So that is what we are expecting. And moreover, today is an holiday in the US market. So today is an Independence Day, so we can also expect a low volatile market. That is the reason why we are applying this type of strategies in order to avoid trading wrong trading decisions. So let us see what's going to happen during the price action. And happy trading. Take care, and thanks a lot for all your supports in watching your videos. Take care. Bye.